The newly introduced Twin Peaks model in South Africa's financial sector is expected to have a massive impact on the financial services sector. These two models are designed to reform the regulatory and supervisory system. And joining us for more on that is Deputy Director General for Tax and Financial Sector Policy at National Treasury, Ismail Momoniat. Thank you so much for your time today. And we'll get to Twin Peaks in a moment, but we've just had the acting SARS Commissioner talking to us about revenue collection. When you look at the fact that there has been this undershooting, but they are planning to fix the system and get more people paying, are you, as Treasury, confident that we might have a turnaround this year?
Look, I think that today, you know, the collection was almost up to what we projected in the budget. Obviously, it's still lower than the budget of last year when we were, it's about 48 billion lower. And that's the bigger concern, is going forward, will SARS be able to collect all its revenue? And I think some of the steps that have been taken, for example, by the President, and some of the measures I think that will be put in place, like Minister Gigaba did announce that we are going to introduce legislation to improve the accountability mechanism within SARS. All of those, I think, will play a positive role, and I think we're confident that we'll be able to reverse the slide and get SARS to collect the revenue that we need for our to spend on critical sectors like education, health, and so on.
Delivering those services. All right, let's get to Twin Peaks. What is it?
It's a TV program.
That's what outside. I hear that sound at the back of my head.
No, well, what Twin Peaks is look, following the 2008 global financial crisis, the kind of world has moved away from this paradigm of light touch regulation of the financial sector. And what Twin Peaks does is it introduces, to use the words of the IMF, a much more intrusive, intensive, and effective form of regulating or supervising the financial sector.
Okay.
And what it does is, the one peak deals with prudential regulation or supervision to see whether a financial institution like a bank is healthy financially, is able to keep to its promise. If you put money into the bank, it's a promise that you can get it whatever time you like, that they can always pay your money back when you need it. And the other, which we haven't had, is to deal with protecting customers and improving market conduct. What you find in the financial sector is that there's many bad products that are sold that you don't really need, or the costs were opaque, customers weren't treated fairly. So we've actually established a new regulator separate from the Reserve Bank, which will actually dedicate itself to ensuring that financial institutions treat their customers fairly, and the way they conduct business, that they do it properly.
And that's the one that will replace the Financial Services Board?
Yes, and I should add that from the 1st of April, these two twins have been established. And of course, being a holiday, the first working day was today, and the Minister of Finance, Mr. Nene, actually this morning, before the SARS revenue numbers, actually went to the offices of the FSB to launch with the staff the Financial Services Conduct Authority. And in the afternoon, after the SARS function, he had a busy day. He then went to the Reserve Bank to launch the Prudential Authority.
Okay, so what differences will we as consumers see? What differences will industry see going forward with the implementation of this?
Look, from the customer side, it will hopefully mean that they can place more trust in the financial sector. Firstly, their money will be safer. We've had, for example, banking failures, we've had the Fidentias, we've had the Propeller Fund. These sorts of incidents ideally should be reduced even more than we've seen in the past. We'll never get them to zero, but at least let's reduce them drastically. Secondly, customers of financial services should expect to get better treatment, that they are being treated fairly. Financial institutions have a lot of resources. They are extremely powerful, and there's an asymmetric power relationship. You know, if you want your money, they can get lawyers, they can string you out, your pension doesn't get paid, etc. What this does is it on the one hand takes preventative action to make sure that they treat their customers fairly, and to the extent that they don't, that the complaints procedures work more effectively internally, and secondly, the ombuds system also works more efficiently.
All right.